All right, guys. Hope you guys are having a wonderful weekend. I wanted to give you guys a stream, a video, a quick video, and a rundown of what happened last week. I want to give you guys some of the ideas that I'm looking at because there's a lot of separation and a lot of things that are happening right now that I think you guys should be aware about. The first thing I want to touch on, thank you for joining us. Okay, thank you for spending your time with us. My goal is to help, whether you're new, whether you're a seasoned trader, that you're able to find whether it's ideas or more importantly learn something new for the people that are new. Hopefully they can take away something from at least every single one of these videos that I put out and can gain some type of knowledge or identify what it is that's going on in the sentiment. So I want to start off with this. I need you guys to hit that like button, and more importantly subscribe if you have not subscribed. So if you guys go through any of my videos and you guys see any ads, I need you to know that this is not funded and this is not Google putting out a video because of copyright. I have went through my videos and there is not a copyright on them. It is just that there are views and I am not to a certain point. So therefore they're taking all the ad funds. So if there is, you know, any appreciation in you that you like to watch any of these videos or like to be on, the side of trends that we like to catch and sniff out early, please do us the service of subscribing. If you haven't subscribed already, I'm not sure what you're doing. Again, we're trying to get to 1,000 subscribers, and we're on our way, right? I appreciate every single one of you guys. Hit that subscribe button. Like this mother sucker, all right? What do we have? Google is I don't know, are they a $1 trillion company? If you don't even know what a $1 trillion company is, let's just, for every fourth quarter, they're going to be bringing in, 250, right? What is that? 325 billion a quarter every 3 months, if my math is correct. So it would be it'd be really awesome if you guys could just subscribe. And again, once we get there, you guys won't hear me say it at all. Maybe I might say, hey, hit the like and subscribe because I've been saying it for so long. But we've just started this channel about, maybe a year. It's been like 6 months, maybe. I started this over in the summertime, so I appreciate all of you guys that have been here. If you don't know as well, we trade live right here Monday through Friday, 6:30 to 4, 7:30 to 4. Come in and get our game plan, see what the news is, where do we want to be in the markets. Once again, I had a green week, all right? I had a really nice green week. Not how I wanted to get it, but it doesn't matter. I didn't get what I wanted, but guess what? I was green. I made money, all right? And so far, just the start of the year, um, we've been knocking it out the park. We've been putting ourselves in the right places, identifying, whether we should be long, whether we should be short, and going from long to short. If you remember the JP Morgan trade, I told you I was shorting that for 2.5 weeks and then flipped long. And I've been giving you guys out that. We've been getting some solid trades here. So again, hit that like button. Subscribe. It is important. I would have greatly appreciated if you appreciate any of this stuff that I put out. Keep me coming. Just hit that subscribe button. We get to 1,000 subscribers. You're not going to hear me say that again. And again, remember, if you see ads, I'm not getting paid for that. That's Google saying I'm getting a few views. They want to benefit from that. And that's what that is. There is no copyright on it. All right, guys. Thank you for that. Let's start out with the biggest news of the week, in my opinion. And that's the elephant in the room, and that's layoffs. We sniffed these layoffs before anybody. We already had a sense that it was coming. We started getting it through Spotify and other smaller companies that aren't really talked about. So you had again, wave of layoffs this week, all right? Google, Microsoft, Salesforce, TikTok, Levi's, Wayfair, eBay, Brex, Riot Games, Meta, Amazon, Unity, Spotify, etc., 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 etc. All right. Why should you like and subscribe to this stream? Because we trade right here live every week, every day, Monday through Friday, 7:30 to 4, and we can help teach you a new trade because you never know, you might be next. You never know. You may be next. So it is time to learn another skill. You can take this with you for the rest of your life. You can use this along with Ubers and part-time jobs, and there is access to a lot of things that individuals, our parents, let's just say, our parents did not have. Our grandparents, our founding fathers, they didn't have all these opportunities, right? So COVID has really opened up a door that I think a lot of people are not even unaware of like the game plan that they could do for themselves. Let me throw in sports betting. I'm not going to leave that out because 80% of you probably can't stay profitable in that. I am a proven fact that it is possible. All you have to do is make the right decisions and manage your money. You obviously have to, you know, be right more than you're wrong, right? Understanding that VIX, that sales tax there, right? The VIG, they call it VIG, the VIG. So, but that's what I use. I have always used sports for the past 6-7 years since my state has had it at the casino. I've used it for Christmas. I've used it. I've actually usually have taken the rest of that money and went right into basketball season. I haven't been doing it so much this year. I did put out some videos. If you want to see some of the things that I have, go check it out. We'll be working on that next season. Let's go back to the market. So again, if there is this wave of layoffs coming, please do yourself, do your family a favor. Learn a new skill. No one can take this from you. All right. You have a phone. You have access to the markets. Okay. You have a laptop. You have access to the markets. All right. And again, there's different ways to trade. So you don't have to just be in and out. You can swing trade, whatever. And, and again, this is up to you. All this stuff is not financial advice. I am on here just giving you guys some of the ideas that I have for myself and some of the stuff that I'm seeing and passing it on to you. So that, for that, I would hope you would hit the subscribe button. We don't charge a fee, right? A lot of people get together and make groups and they charge thousands of dollars. And you guys do not benefit from it, let alone benefit. You don't get a tangible item out of that. And you spend all that money, right? I'm not here to have recurring revenue like some of them people. I don't need it, right? I can always use money. Everybody loves money, but I feel like there is a way. It's not that I feel like. I know that there is a way to do this that a lot of people can have access to and still learn without being raped and drained of your money. Maybe that was a little strong word, but that's exactly what it is. It is recurring revenue, and they just want to milk you for every bit that you have, whether it works or it doesn't. Make sure you read those legal disclaimers. I will be honest, I have not joined a single group in my life, and I'm thankful I haven't had to. I'm thankful that I was taught this years ago by a few individuals that have been in the game about as long as I've been alive. Longer than I've been alive. Let me take that back. Longer than I've been alive. All right. So if you appreciate that, hit that like button. Please hit that subscribe button. And one more time, those ads are not from me. All right. I will not receive pennies on the dollar for those ads. So I'm sorry for the inconvenience, but that's Google. That's what's going on. And again, there is no copyright for those to be on there. Let's keep it moving. So let's do it. I talked about the layoffs. That's first. So we had a flood of layoffs hit the scene this week. Financial conditions. Okay, that's the most important aspect to this video. Why I think that we're getting ready to start seeing some downside. Okay, and I don't know if I wrote this, and I'm going to let you know right now. Try to take what I say and try to remember a lot of it. If you have to go back and watch it, please go back and watch it because there's probably things that you will miss. I promise. You're not going to be able to take everything in. I want to notice what's going on in France, Italy, Germany. They're all getting their GDP numbers. Right here, just for starters, France, negative GDP. I told you guys last week, people were surprised. All right, it wasn't surprising in my eye because I keep track of the majority of the data that I thought that we could see a 3%. It's recorded right here, and I don't like to make guesses like that because it doesn't help you. It can cause you to get frustrated and make you think that am I not seeing things right because I'm not guessing data? Like no, we get it right. We get it right. I don't dwell on it. That's what I thought. It happened to come in line. I will be wrong. All right, I will be wrong from time to time. I'm okay with knowing. Not knowing, I can't say knowing because that's not it, but I have an idea where I think roughly it should come in line. But even that doesn't matter because it's if this then that, right? It comes in low, it comes in high, how low, and if it comes in flat, right? It's those numbers. When these numbers start coming in and they start surprising, that's when we're going to start getting volatility. So you have to watch these. And if you don't know, 90% 100% of the S&P, over half of their business is done worldwide. So if you don't watch these data sets to like have an idea, or you watch other markets, for instance, right? Because Japan, Europe, right? Germany, they were all making new highs and we were just lagging behind. So if you looked at those markets and you could identify, hey, we're making highs in those markets and we're just lagging them. Just like gold a year and a half ago. Look at gold in other currencies to see what it's doing compared to the US dollar. Okay, these are all ideas. China, it's on its you know what right now. It's on its butt. Which we're going to get into China. We got 2 pieces of news for China. So this week, not only with J Powell, I'm not really worried about J Powell. I'm just going to trade it, right? We'll get some volatility. But Europe, Italy, Germany, all these big main countries have GDP. We want to see how it comes in, right? I want to see how it comes in because is this a forefront to what we're about to get? Okay, usually it'll happen across the world. Doesn't have to. But, taking notice on what's going on across the world to say, hey, we probably could be trending in that direction as well. All right. So that's also important. I wanted to just bring that up. We have JOLTS jobs openings. I'm not really here to talk about data and all that. China PMI. We have Powell this week and all that fun stuff. So we'll continue to watch these initial jobless claims. Jobless claims came in really good. What was it? 214, I think. That's a pretty big jump as well. I would like to see it this last week, previous week. Let's go see because that was important. I want to make sure that I am correct. Yeah, 214. All right, and then the week prior we had 190. So, it doesn't surprise me that we came in so low and then we cracked that 200 level twice, because it was the holiday season. Right? There's just a lot going on. And again, don't just dwell on one single data set. You get it? Okay. Now, if it's way above and way below on a meaningful data set, then yeah, you're going to get volatility. If it's right in line, you may get volatility to say, hey, whether like that's what the market expected and like it's ready to continue higher or not. It all depends, right? There's all different kinds of scenarios. But for the most part, if it's not something like inflation where they're saying we're supposed to get 4% inflation month over month and it comes in at 9 or 8.5, yeah, that's a problem. The market's probably going to pull back. So knowing sentiment and all that fun stuff is good to know, right? You got to understand the sentiment, understanding the sentiment, knowing it, knowing how to trade it. Let's get into the trades, guys. I spent enough time there. And if you guys have questions, please, you guys can throw them in the chat, ask them. And again, I urge you, please hit that subscribe button. Because if you're joining right now, those ads from the prior video, guys, that's not from me. That's Google, right? That's Google, a company that's bringing, I don't know, 300 to 400 billion every 3 months. I don't know if they have $1 trillion market cap or not, but I'm sure they do. I'm sure maybe there or over. So anyway, financial conditions. All right, listen, this is important, and this is why I wanted to bring this up. Because when financial conditions are at their lowest, there's a reason why. All right, it's because the Fed, there is liquidity. It's liquidity, right? Whether it's from the Fed, whether it's from the government, whatever. The Fed has been providing liquidity. Now, what I'm going to do is I'm going to tie this up to you, and I want to show you guys why I personally feel like this is coming to an end, and this may start to revert back to the mean to the upside. Why we may start to see some tightening. Now, my question is with that, does the market, the SPY and all that, we have earnings right now. Okay, 1, how do we take earnings? 2, do we start to try and price this in? All right, there's a lot of uncertainty with earnings. Earnings are, right now, the sentiment that I'm getting, they're okay. Some of the semis aren't doing too well. Like some are okay, some are bad. But the banks were all well, so some blue chip names like IBM, some are doing well and some are doing bad. That's the way it is. And that's what I told you guys I was looking for, is to see who's getting the business and who isn't. Okay. Who is like coming off of this uptrend and probably going on a downtrend and now they're uncertain, or who's just flat out like PayPal not doing anything and they're just trying to turn the ship around. Okay. Financial conditions are important. Okay, so if we go here when we started, now this is why financial conditions are the way they are. All right, because the Fed is providing liquidity to the banks. And look at this. All right, I want to show you guys something. So we started this here March 8th, right? Wham, right? All the way up. We had an uptrend until where? Say June 28th, right? Let's take it to the spike because I want to show you guys something and the importance of understanding the liquidity. And if you remember in COVID, okay, we knew that the tightening aspect was coming, right? We knew rates were coming. We were being told, right? The market was being told, hey, we're going to start raising rates, blah, 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 blah. So we just, at the highs, we consolidated for a while. We had a war pop off. We had, tightening in effect. I guess maybe the market also wanting to know how far they were going to go. Higher for longer is not necessarily a number. Even though we kind of already know somewhat the idea where they wanted to go was 4.5 to 5.5 area. So we started this, right? And then around, what is this, July 5th? Let's see, it curled over like June. So let's just go look at June on the SPY, okay? Let's go look at June on the S&Ps, and we're going to get into a lot of the ideas that we're looking at. So this is March, right? Here is this right here, this pivot high. I'm going to show you guys something here last year. And I want you to take this in because there's two things the market was going to do. Right here, the market was getting ready to start turning things around right there. Even though, yes, prior we had that pivot low, we started going higher. Well, Cash Cart, we started pulling back. All right, we started pulling back. Well, right here, I'm pretty sure, is where you had Neil Kashkari come out and say, at an event type thing, and said, we are on the back end of rates. Like, we are on the back end of this. Like, we have 2, 3, 4 more to go. We're gonna do our 50. We're gonna do our 25. We're gonna pause, and then we're gonna do our 25. So the market's like, okay, cool. We're on the back end of this. We've gotten confirmation that rates are being, getting ready to be, we're on the back half of this. They're on the end of it. Now they're gonna hold. So then we get, okay, SVB. We get, you not only do you get SVB, you got Silvergate, right? Whatever that company was, Silver something, and then First Republic. Okay, that's when we got this. You started getting the banks, SVB wanting to raise money. All right, so then they come out. Here's March 13th. All right, the Fed comes out, starts this program, and then since then, what has the market done? The market has done nothing but go up because the Fed is providing liquidity. Financial conditions are easing. If I go here to where June we said, you can see right here at this level, right? What is this? This is June 8th, June 9th, June 12th, June 13th. We start putting in a range. Down, up, down. All right, we're selling off. We come back up. We test that level. This is pretty much just, in my book, a range. Yes, we continue to go higher. But right there is a range. I'm going to put a box right there. All right, from low to high, and you did not break out up. You actually didn't even break out of it up until the 12th, until December. All right, but look at this. This is 1027, 1030, and look at this gap. You see this gap here? Right here. What is this? 11.2, 11.3. All right, it sells off, pulls back, gaps up. Look at that huge gap up right there. That gap up on the 14th. Okay, look at this. Well. Oh, funny. We consolidated, and then what happened? We had this nice ramp up November 1st. We consolidated, and then on what? The 29th, 6th of December, bang, off to the races. Let's go to the SPY. Right here, that's the 11.2. You're getting these gap ups. We're seeing that they increase the rate of change in that liquidity program for the banks. 11.2, 11.3, right? Here we go, consolidating through the 7th. 11.13th, bang, gap up, because we're seeing the increase in liquidity, and then it just ramps up from there. The last couple weeks of November, right? And then what did we do in the last few weeks of November, right? Look at this, just went. And then December, wham, look at this big candle. What day was that? 12.13, okay. Let's go 12.6. Look at that, right? You go from 11.29 at 113 to 123. Okay? 76. And then it's still ripping and roaring. This is coming to an end. This is coming to an end. So in my opinion, we still have the month of February. I still think we could go higher depending on this chart. Unless this chart starts to, if this chart starts to flatten out, then I'm going to know, all right, I'm going to look for a consolidation, a possible pullback, whether, the tricky part is like, I'm not going to make it complicated. I don't care what earnings are. I do care because when this stops, this is holding things up. Okay. This liquidity, this financial conditions that are being eased, okay, is holding things up. This comes to an end, and then you add on earnings that may or may not be good, at least guidance that's getting lowered, right? And the unknown of what's to possibly come starts to get priced in. This is done in the first of March, the first week of March. What's up, Chris? Malik, guys, how you guys doing today? So anytime you guys have financial conditions easing, it's important to look at that chart. If you guys look at financial conditions, you guys can pull it up on Fred. You can pull it up on TradingView and FCI. Financial conditions are at their lowest that they have been in a while. Just about around, look at this. We're not going to get the COVID lows, but boy, are we working there. So we could start to see this in February. It's going to start turning around. I don't know if it's going to price it ahead of it or what. But the beginning of March, that program's over with. This will start going higher. When this starts going higher, let's just add in the SPY. Let's add in the SPY or the SPX right here. I don't know how this is going to look because I haven't done it. But would you look at that, right? Financial conditions eased. Okay. They start turning up. They're still eased here. They're at record level lows there, right? And then look, right here is when it has that huge ramp up. What happens? Goes down, right? It goes up. The market goes down. It goes up. They meet. Bang, right? And then look right here. The market's pulling back at that point right there. Look at that reversal. And then it goes up. And what happens? It starts going down. It comes back up, right? It goes back down. And then it sells off, and then we just rip. We just go down. This is why financial conditions are important, to know the sentiment of what's going on. If you cannot see that, I apologize. I'm gonna have to do something to get it working, like, so you guys see it. But anyway, it's important. Like, look at COVID. Financial conditions tightened. Look at that sell-off. Boom. Right? And then they just fell out of bed, and we just went up and got up out of the bed. It's important. This is liquidity. All right? So you just have to know that these things are happening. Bank failures were happening. They're taking care of that issue by providing liquidity. When they provide liquidity, financial conditions eased, asset prices can go higher. This is the name of the game, guys. So let's look, because this is done in March. I'm telling you right now, I will be looking to probably get SPY puts around 3 months out. I feel like we could start to see these gaps get filled. All right, it would not surprise me to start to see these gaps get filled, and then possibly buy again. But here's the thing: what is the next? What is the next reason, and when is the reason? Could it be because of a possible recession with all these layoffs that are coming? Okay, we have a bunch of layoffs coming, but yet the market's screaming higher. The market's not worried about layoffs right now because layoffs haven't made the news, or like there hasn't been a reason. The jobless claims, like if the jobless claims come in really high, you'll see a pullback. But if the Fed and them are providing liquidity, they're not going to care because that's money, right? That money goes. Again, I try to explain this all the time for anybody that's new. If I am a bondholder and you're the Fed and you come to me and give me cash for these bonds, just say, right? I'm sitting with cash. I'm going to put that cash back to work. So that is liquidity that has came in and gotten into the system, right? I've given them the bonds that I've had just as an example, all right? So it's important to know, okay? So the next question is let's not worry about how long that tightening can go on for, okay? It'll probably go on until they see GDP down at a record level, right? And they've already said that they're starting to think about cutting. So that's not liquidity, right? That's them easing rates, but that's not liquidity. So I still think, financial conditions should tighten up a little bit. Just because they're cutting rates and financial conditions are tightening, people are like, oh, it doesn't make any sense, and layoffs, and oh my God, the recession, like, did they go too far too fast? That should all come. It may come. I don't know if it's going to, but that will be the next story, which could be 6 months down the road. It could be I don't know if it'll be a year, but maybe 8, 4, 6 months, 3 months. Okay, March. I don't know. So I will be looking for a pullback because I feel like we're almost there. And I want to show you guys one more thing. Look at the SPY. Look at the divergence. Let me do auto range right here. And let me bring this up. Because I want to show you that we're already getting the bearish reversal signal right now as we speak. All right. As we speak, we're already getting it. Okay. So you can see here the S&Ps. I'll just draw it from the top. The S&Ps are going higher. Right, we're making new highs, while the RSI is making lower highs. That's divergence, okay? That's an important little bit of piece of information that can help you, identify a trend reversal. The thing is we do not have the volume yet, okay? It's coming in. I said last week, if you guys join us on the desk, we trade live right here, Monday through Friday, 7:30 to 4. I have said all week, Monday, Tuesday, Thursday, Wednesday, Friday. This is a sense of profit taking. Don't fight it. Okay? Don't fight it just yet. Let it pull back, which I'm going to go into the SPY and the levels that I want to look at to go higher. All right? But if you guys did not notice that, if you're watching the indexes, look at the Qs, right? There's your divergence with the Qs. You see it in the Qs, all right? And just being in the markets for as long as I have, that nobody, again, the time that I have in markets, nobody can take that from me. I can get a job, I can do this and that, I can get laid off, and I can say, okay, I got laid off, I have no job, what can I do to bring in some money? Okay, I can go to the markets, I can go to Uber. Nobody can take the markets from me. I have the markets. I've learned this skill. So, let's go to the half-hour chart real quick, all right? I don't know why this is doing that. I tried to change it. I'll have to fix it in a little bit. So real quick, so I'm going to run through these. We're putting in a bit of a bull flag here. So on the S&Ps, all right, I want to watch this level here. You can see we broke 486 or 487. I want to see us if we pull back to 486, like 486.50. Okay, I want to see if we can hold this level, because this is going to give me an idea from Thursday's pre-market highs, Thursday pre-market highs, that we are continuing to put in higher lows. Okay, if we end up coming back down here to 484, 485, I'm sorry, this flag's kind of been broken, and it could just, then I would possibly look for a bounce higher. But I think we can hold this level. I think we still have another leg higher. I don't think there's a reason just yet. We're about to get the big boys in earnings, so it's really hard to dictate what I think is going to happen in the market. How you doing, Wiz? It's okay, buddy. I pretty much just brought up layoffs. I just brought up financial conditions, and I was showing a chart of just a relationship, and when the Fed's providing liquidity to not fight the trend, and that's done in March, right? That bank term lending program is done in March. So, I was just relating, like, financial conditions tighten, right? We fall. They meet, we sell, so on and so forth. Look at financial conditions right now. This program is done in March, again, because Wiz just showed up. It's done in March. All right, so I'm going to be looking to buy pullbacks, but you're already seeing this week. We saw the take profits. You're seeing institutions start to take profits because it takes them time. They can't just get in and out in 1 month, a week, right? They don't want to do that either, because they want to be able to sell above VWAP, buy below VWAP, things of that nature. Try to get the best price that they can, because when you're dealing with, hundreds of thousands of shares, 10 cents matters, okay? 10 cents matters. For anybody that hasn't trade sized and understands a 10-cent movement, if you haven't experienced that, then, there's a reason why it takes them time, okay? And again, just because of the size. And it's not just one institution. There's many out there. It's worldwide. So you saw this Wednesday, Thursday, Friday. We would get to those pivot highs, you would make a high or whatever, and we were pulling back. I did take a little long here on Friday after the live. I took a long right here, right off of this level. Right, I took a long off of that level. I pretty much scalped that level. It was a small trade. It wasn't nothing crazy. I think I bought 20 contracts, 20 dailies, and again, what I noticed on there, you guys may not be able to see it. And what I try to preach is, you see how this 486 expired worthless, right? Well, look at this delta that's at 3 cents and the price is 1. So when I tell you guys, like, some of the things that I do in the afternoon, there's a reason why I do it, and it's risky, and my position size is dwindled. Which brings me into the Fed meeting this week. If you guys, I'm going to give you guys an idea to help manage risk to stay green, right? Like monthly, weekly, yearly, like consistently stay green. Fed days, cut your position in half. You're still going to make enough. You're going to make, if not more, than your regular size position if you do end up trading Fed volatility. Bring your position down. It's going to pay you enough that you don't have to worry about risking and being in a position like that full size. So keep that in. If you haven't like thought about that or done that, bring it down. When volatility is at its highest, cut your position size down, make it small, and you'll get paid like it's a full position. All right, if the volatility is there. And again, Friday, we had this failed breakdown off of this bull flag down here. We had this failed breakdown, and I eyed it up because look at the volume that came in on that breakdown. That volume was poop. It came back up, tried to reject it, but it just came and held that level, and I got long right there. So, yeah, I actually was trading that in front of a family member, and I said, watch this. Like, this is what's going on. This is what I see. Let's see if I think that this is going to be a failed breakdown. It starts breaking down. It gets back up. And I said, okay, here we go. Like, we have a little bit more volume to the upside. Let's look for a low volume pullback right into this area. Snagger long right into 486.95, 97. And that's what we did. That's what I did. And I took profits right up here. Once we broke this level here, going into VWAP on this extension, I took profits. So that was another trade that I did Friday. Friday was one of those days for me. It felt like nothing was working. I have actually went and taken care of some of the things that I had happen Friday, and so they won't happen again. So I've done some things for that. Again, I had a great week. I did, listen, my number's bigger. I made some really good money. It wasn't how I wanted to make it, but at the end of the day, I did my job. All right. It may, and this may happen to you. Like, you try to, like me, I try to be a perfectionist sometimes, and that can kind of hurt me. Okay, that can hurt me because either I'm taking entries too early because I'm not letting things set up and I'm just hitting them at that level and not letting the stock do what it needs to do, or being in it, right? Not watching a stock, deviating from my plan and watching Tesla instead of Boeing. So let's continue this because I still have a lot that I want to go over real quick. I didn't post that. Okay. So, let me do this real quick before they do try to copyright me. Okay, bang. Right here. Right here. So, we have layoffs. We have financial conditions easing that I think is getting ready to turn itself around, right? Financial conditions are at their lowest. We have one more month. Okay, we have one more month and that program's gone. You should start to see financial conditions start to rise. You should see the market pull back. All right. You got to watch Apple, Netflix, or not Netflix, I'm sorry. You got to watch Apple, Microsoft, and all these other names. We still have a lot of earnings to come. All right, you've gotten through banks. You've gotten a lot of airlines. You've gotten some blue chip names. So it's been like, for the most part, it's been okay. If you were to ask me how I thought about these earnings, I would say, well, there's obvious strength in financials. Like, there are winners, there are losers. Like, earnings aren't that bad. They're okay. They're good. Like, and the ones that are losing aren't like getting their head knocked off. Like, very few, right? That are just struggling, but they've been struggling. All right, Texas Instruments, like they've been not raising guidance, but they've been missing their earnings. So like for them, it's nothing new. Like Intel, that's Intel for you. So it's like if the shoe fits, right? So in my book, I think earnings have been okay. I don't think you'll get like, again, we still have a lot to come. So we'll talk about that next week after we get through these earnings. And join us, guys. Join us right here live Monday through Friday, 7:30 to 4 on this desk, on this channel, and we go through news, what we want to attack and all that fun stuff. We share ideas, celebrate the good and bad. And again, if you guys are seeing ads on my video, I am not getting paid for that. All right. Please subscribe. I urge you, subscribe. We get to 1,000 subscribers. I will not say it again. I'm not going to be one of those that just says it throughout the video. But I urge you to do that because Google is taking advantage of... It's not that they're taking advantage. I'm using their platform. Okay? But I'm trying to reach people that don't have access to waste thousands of dollars to be able to just learn a new skill and would like to be somewhere. Okay? And benefit themselves. So I urge you guys, please do me a solid to subscribe. And if you do continue to see these ads in the future, I'll let you know when ad revenue is on. Okay, I am not getting paid for it. Google makes, I don't know, again, 450, 325 billion a month every quarter. I don't make $1 billion a quarter. So, thank you guys if you guys could. Let's see here. Yeah, same here, Steve. I'm still Clone. I'm still bullish too, going out to the month of February. But like I said, you're seeing some profits taking. Listen, these institutions know exactly what I'm telling you. This bank program is done in March. That is liquidity that's just been skyrocketing, okay? That has caused financial conditions to ease. Look at this lately. Have any of you guys seen this chart? What I feel like this is them just offloading all this liquidity to the banks so that the banks can get through a time of them lowering rates because they're ending the program. So they're like, take what you need. Here is just what we think you guys may need, so that we don't have any issues because we're ending this program, so that we don't have issues to when we get down to like a fair level. What's that fair level? I don't know, 3.5. I don't know. Who knows what that bank level is that these banks don't struggle at with rates? This was all. You guys got to remember, all this stuff was pre-planned. Back 2017, 2018, 2016, all right, when we didn't think about COVID and think about things happening. The Fed pretty much relayed to the system how the time span that they were going to do rates and all these decisions that were going to be made. They had put forth a timeline, and money gets put to work on that. And then when things change, right, and then on top of the change, there's also a big change because, oh my God, we got inflation. We just took out $7 trillion. So that's why a lot of banks weren't prepared for it. They were also not knowing what the hell they were doing. Let's be real, okay? Maybe they should have not done those things. Again, I'm not a banker. So I appreciate you, Ziggy. I appreciate all of you guys. Again, and when we get to 1,000 subscribers, you guys will not hear me sit here and say that stuff. But I just wanted to let you know, if you watch any of my videos, I am not getting paid for it, and I did not put those ads there. All right, big news that came out that wasn't talked about, but China, other than the liquidity. So CNBC is reporting China sent dozens of military aircrafts and naval ships toward Taiwan. All right, there were about a dozen that they said, helicopters, fleets, crossing the Taiwan Strait. Which in the same day that they did this, Jake Sullivan was over there with the Chinese Foreign Minister Wang Yi. Wang Yi, I can't even say that without like. What the fuck? So, Wang Li had a low profile meeting. So no, but the meeting was a low profile meeting. They did this Friday 6 a.m. to Saturday 6 a.m. local time. The central bank also announced. Let's see here. Sorry about that. Central bank announced it would help ramp liquidity to property developers. Property stocks, rallied 3%, 3.5%. County Garden bounced 2.9%. February 5th, the People's Bank of China will allow banks to hold less cash in reserves and encourage banks to lend to qualified developers. Are you guys seeing what's going on here? Not with like war and stuff like that. Do you see what the shift is? There's a reason why I brought up financial conditions. Okay? Because we are about to get out of easing financial conditions while China is about to start. Okay, so there is this rotation and this lag and push and pull where I feel like, again, the European, German markets, okay, Japan, all those markets have made new highs and we have just been lagging. All right, let's see if, again, I want to watch their GDP numbers. It's important because, again, these businesses do business around the world and 80% of their business is done around the world. 80% of those profits. But anyway, not profits, but you guys know what I mean. So now we're getting this divergence. We have easing financial conditions. China's getting ready to start. If we're going to start tightening, okay, just because we lower rates, that's not necessarily financial conditions easing. Pulling rates necessarily isn't financial conditions easing. It is when it's liquidity, right? Liquidity being provided. So let's start to look at these China names, right? These ADRs. Let's see if we can get them to start curling, which I'm going to bring up Alibaba. So PayPal CEO came out this week and was making a lot of promises, right? And then they said they had this live event, which again wasn't live. And he's announcing AI-based products. And it feels like the market wants proof, right? It wants proof that these things can happen. If you guys remember Meta, all right, there's one individual out there who I follow who's taught me a lot of, some of the things that I know. When Meta or Facebook became Meta, what happened? It sold off, right? It got smacked. Well, a quarter before the actual big sell-off, Mark Zuckerberg was talking about Meta, right? Nothing about Facebook. So when the market identifies if there is a fundamental shift in a company, number one, why are you making that shift? All right? Because if you're making a fundamental shift, what are you not telling us about the original business? Is it not working? Right? Like the market wants to see. If you're going to go full on scale to another business like you saw from Meta, you're going to get sold off. The market's going to say, okay, obviously there's something going on here because the original business isn't working and you're trying to go into something else. All right. And then what happens? It starts working. You're coming out with these things like they have the glasses, all these things just continue to work. I mean, as a CEO, you need to know how to be able to, run a company, whether it's layoffs, products, spending too much money, not spending enough, all that balancing stuff. So market sells Meta off. Meta rallies after they have proven some of what Mark Zuckerberg was talking about. And then you have Apple doing it. Then Apple has their headsets and all this fun stuff. So Seven Close says, I started a Robinhood $200 cash account balance with disabled margin. Have a goal to make my first $50K. With what? How much was it? $200? Just give it time, Steven. Do the right thing. That's all I would suggest. Give it time. 50K is a little bit, right? From 200. That's a big percentage. If you could do that in 2 years, I would be surprised. But you can. Oh, you absolutely can. Especially with the volatility we have now. You just need to execute, number one. And you gotta really manage your risk for if something happens. Because I feel like what's going to happen now, and people aren't really understanding, is why I'm bringing up this shift, is because if we start pulling back, and Thursday or Friday, I almost bought UVXY, which is VIX, which is pretty much triple or double leveraged VIX. I was going to buy VIX or UVXY because I wanted to just have a little bit out in case we started to see this shift in the markets. Then I could say, all right, I have this in triple leverage, or I have UVXY here. Let me throw on some calls to off balance that, and then I can start working. Right? You want to work your portfolio. You want to work your money. Again, I'm not telling you guys what to do, but here's what happens when financial conditions start to tighten. Puts go up, right? You're going to start noticing. We might, I don't know, if the VIX gets to 20, 26, 21. Again, you guys should know those two standard deviations in the VIX, okay? And if you go through the charts, you're going to know that the VIX likes to move in 2 standard deviations. If you go through any charts, let me give you guys those numbers. I think it's like 10. So it's 8 points. Okay, 8 points from $10. Every 8 points in the VIX would be a 2 standard deviation. Why I say that is because when you get to that 4th standard deviation, is when the market that's the top. That's usually the top, and that's around 52. If you see 52, that's a problem. But 44, you'll get to 3 standard deviations. It'll pull back. Just know those, okay? Just know those standard deviations for when it goes. Like wherever we are now, I have here written down 20, 28, 36, 44, and 52. Go back and look at VIX and see if those numbers don't line up in an area. They do, because it's standard deviation from 20, I'm pretty sure that is. Or from, what is it, like the usual, it's like 12, 18, something like that. So, if you go back and check out the VIX, those are about the numbers, and those are usually the highs. So if you guys aren't aware of those, just know, you start stretching it to your 3, 4 standard deviations. You may want to start thinking about the top, right? So what do you have here? 36, right? What's this one? 29, 30. So, but really look where it closes too, though. You know what I mean? So what do you have here? 27, 80. So 28, right? 26, 27, that area. Just, it all depends on where it rallies from, where that standard deviation is going to be. Just be aware. All right. You hit 4 standard deviations. If something goes wrong in the next few months, look, if the VIX is ripping and roaring, guys, know when it's just way up there at that 4th standard deviation, that 36 area, start looking to start to try and buy like a month out calls, right? Just, or whatever you want to do, however you want to do it, right? TQQ, SQQ. And when you guys use triple leverage, also know if you guys want to also hedge like some trades, right? You can also dwindle your position size and do triple leveraged, right? Instead of just trying to buy 10, 15, 20, 30 contracts of the SPY, buy 10 of the TQQ or SQQ, right? You could always use those. Or in accordance, if you have a long, spend a quarter of that position size and buy the short side. There's just different ways to be able to run money. So I talked about China. We talked about financial conditions. Okay. And I was actually briefly talking about end of day contracts too, though, for the SPY and stuff. When you start noticing that delta is more than the option price, and you get that, like, let's say if the contract is 10 cents and you have a delta of 30, all right, that means pretty much for every 25 cents, you're going to make 10 cents. You're going to make 100%. All right. Every dollar, it's going to pay you 3 times what you make if the delta is higher. Again, it's very risky. So if you use a little bit, okay, don't do it if you don't know what you're doing. First off, let me just say that. Don't do it if you don't know what you're doing, because you're going to lose money. All right. So again, what I do is I focus on my deltas, right? You guys learn the Greeks, because it's very easy to manage your risk with options. People say they're a scam. They're not a scam. They just don't know what they're doing. All right, so if you have a delta, I'm going to say this right now for anybody that doesn't know or hasn't been told. Okay, if you have a delta, let's say you buy a contract, right, and you spend $1 on it, and you have a delta of 60. I don't care if it's up or down. That's telling you, for that dollar position you just bought, pretty much unless you start getting some volatility, every dollar you make or lose, every dollar it goes up or down, and that delta is 60, you're going to make or lose 60 cents on that dollar. So if you got a dollar contract and it says 25 delta, okay, every dollar I'm getting 25 cents. 25 cents. Now, as it goes up, and depending on how fast it'll go up, that delta will move. But for the most part, that's how you can use delta to help manage your risk. If you're saying I'm going to risk $50 and I buy a contract that's 200 and it's got a delta of 25, what do? I'm going to be buying, well, obviously it depends on where my stop loss is, but to make it easy, I can buy 2 contracts for $200. That's a $400 position. And if my stop loss is about, 50 cents, 25, $1, whatever it is away in that range, I know If that delta is 25 and I bought two contracts and my risk management for the day is $50, I know those two contracts at that stop loss, it's going to hit. If it hits my stop, I'm going to lose $50. I'm losing 25 cents a contract. My stop loss is $1 away. Or let's just say if it's 50 cents, right? It's an area. I'm not saying you have to completely lose that, but use your deltas, guys. It's the most simplest, easy way to say, how much am I going to make? How much am I going to lose? People don't know. The very easy way is if you got a 50-cent delta, you're going to be making 50 cents on that contract, for every dollar, okay? And it'll move. You can watch it. It'll move like as you get there, depending on how fast. But it's easy. So, let's see here. So rally to follow short. I hate that. Freaking OBS has this. So give me 1 second. 200. I was kind of thinking the same. Was just let him, just let him dream, right? He's just got to execute. That's all it is. He's got to execute. That's a hell of a lot of executions, and that is a big, expectation of yourself to think you can do that, because you can, but you just need to give yourself time, right? You can do it. Right, you could do it. You could take $100 to $100,000, but it might take you 5-10 years. But the thing is, this volatility here, that you're putting a lot of pressure on yourself to think if you can do that. I would continue to work, save money. Use the markets. This is why I said in the morning, something that we have that our our parents or our grandparents or our founding fathers didn't have, is we have an opportunity. COVID brought on an onslaught of just opportunity. Uber, markets. Okay, you got. I don't want to say it but I do it. Sports, right? Sports betting. Like, there is just so many different ways to go about making money, right? As many people think that there's not as much opportunity out there. There are more opportunity in other locations and parts of the United States or Canada, wherever you're from. Right, obviously Toronto has probably a lot more opportunity than somewhere else, right? Like where I'm at versus Miami. Chances are there's a lot more money going around in Miami, or opportunity, I should say. Where I'm at, there's still a lot of opportunity. Don't get me wrong. I'm not far away from many things, but so that's that. Let's go back into what I was just talking about. I'm sorry. I didn't mean to get off track because I have ADHD like so bad. So PayPal, let me give you the levels for those. So I'm going to watch PayPal 60, 62 level. I probably won't trade this and watch it. I don't know why I just told you that I'm going to watch it, but I will watch it. Okay. Because it has news. News is liquidity. So let's run over to PayPal real quick. Let's start going into these charts so I can give you guys my thoughts. So here you have PayPal. All right. PayPal rallied and pulled back to the 50 and 100-day moving average. There's two things that I'm thinking with PayPal. All right, PayPal is either going to bounce and get rejected again at $62. Okay, $62 rejection, or it rejects 63, that 200-day moving average, right? So it's either going to go higher or it's going to go lower, and I kind of think it's going to go lower. I feel like we're going to get this bounce. It'll try possibly to make another attempt up at 63. All right. But I'm going to watch 62. If we get to 62, can't get through it, take the short. I'll be looking to take the short, take profits through the 50-day moving average. Okay. And into the 100-day, because you'll get a bounce here at the 100-day at 58. Right. It'll either this, right? It either goes up to 62, right? Sells off, hits the 100. Bounces, rejects that support level, bang, here we go, 56, okay, 56. Or that happens, the same thing happens at 63, right, or 63. There's a few things that happen, and then 62 could hold, but I doubt that would happen. I feel like the 50-day would come up, and it would touch the 50-day here, and then go higher. But either way, I'm watching these levels, right? $60 is the key level that I'm watching. Right now, it's support. Above us, you have 63. Okay, $63. And then 64. If you break up through 64 and are able to pull back and hold it, this thing's going higher. I don't think that's the case. All right. And I say that because $60 is this key. It's just that key middleman. All right. It's just a key level. If it breaks, look to get short at 60 if you want. and wait and let it do what it has to do. I'll probably let this thing wait. All right. If we get a rally to $64, if we're able to get to 64, I would like to take the short up at $64. That would be a nice short. I'll go through the comments in 1 second. So that's PayPal, guys. That's PayPal. I feel like I'm on the short on PayPal. All right. I feel like PayPal is a short for me because I just don't think the market was too happy with what it said. Like, this thing could pull back, bounce off 62 and then maybe get to 63, right? And then bounce lower and then go to 64. And then the sell-off happens. We'll wait and see. All right, we'll wait and see what happens. Again, 63 and 64 are the two areas I would like to get short PayPal. What's next? And then I'll go over your guys' questions. Oh, Boeing. So if you guys are new here, I was screaming from the rooftop, Boeing, 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 Boeing. Screaming. Like, I could not have did it. I could not have put it out there any louder. But guess what? What happened Friday? It was either Thursday or Friday. We got it. You know why we got it? Because Tesla reported earnings, and that same day that sentiment shifts from like Spirit Airlines, Boeing, and DWAC, and all these other names, and Netflix, what happens? But Bank of America comes out and puts a downgrade on Boeing. That was it. And where was it? We were noticing it was trying to get to the 200-day moving average, and it was like trying to break out and would just reverse, trying to break out and reverse. All we needed was something to just give us that move. It was a huge bear flag here. All right, huge bear flag. Why is this doing this? I don't know why my charts are doing this now. So this was a huge bear flag, and we put it in your guys' laps. All right, I told you guys 215, but 213 was the area. 213, I was looking to get short Boeing, and man, did this thing pay and fall out of bed. Right? Man, did it fall and pay out of bed. So right here, Thursday morning, Bank of America said, or just put a downgrade on Boeing. And that's all we were waiting for. And these analysts know that. I'm sitting here waiting, like we're just chilling, right? Hitting the 200-day. You can see that it's rolling over. We're putting in this bear flag. All right. So now what's the game plan? This little area is holding. What I'm going to look for is just, hopefully, like people subscribing, that we can get back to 209. But if we do not get back to 209, you could probably look at this 206 to 207 short, okay? This whole area right here is what I want to see if we can reject. Right there. And it's an area, all right? It would be Thursday's high, okay? Thursday's high. Maybe this thing tries to bounce and get back up to this 213 level, right? Because if you have that bear flag and it pulls out and you get a low volume bounce to shake people out, hits, if you guys know technical analysis, it breaks out, pulls back, gets short on the pullback. But I think this is the level here. All right, 206, this area right here, I'm going to watch right here. So Friday's highs. If we get through Friday's highs, then I'm going to say, okay, let's walk it up to 209. Guys, the damn door fell out of this thing. The door that's not a door fell out mid-flight. They're lucky somebody didn't get their head taken off. They're lucky somebody didn't get killed, that somebody wasn't sitting in the seat. The person's shirt got sucked off their back. Like, this thing's going down, and it's just a matter of time when. All right, now the target that I'm looking for on Boeing, I think it's like 180. Okay, yes, 190. I want to look to get into this and try to get some time, because right now we're just stuck in a range, and you're going to get more. You're going to get more analysts and more banks to come out to help bring this down. Watch if Boeing bounces. If you see in the morning the next day, on the day that Boeing bounces the next day, if you get analyst downgrades. All right, if you get downgrades, which we'll talk about it on the stream, you just join us right here. If you see downgrades, it's going to help bring us down, right? We pulled back, or we are pulling back to the upside on low volume. Look for one of these resistance levels, right? My level is 209, all right? But I don't know if we get through Friday's high. So that's Boeing, right? Just If it bounces, let it do what it needs to do. If you get an analyst upgrade that morning that they're lowering their price target, then okay. We're really extended below the 50-day, the 200-day, the 100-day. And real quick, my thought also is we are a bit oversold, so we may bounce and try to get to that 100-day moving average, which is that blue line. All right, maybe we bounce and we try to pull that 100-day moving average down. It'll take a little bit, and then reject that. I don't know what's about to happen with this setup. We may have to wait on the on the short side for this, but the reason I say this is because, all right, so they have earnings on the 30th, so that's our next catalyst right there. They have earnings on the 30th. What I was going to say is, I forget. Oh, the trade itself. Why was this such a big hitter? So I took this trade. I took this trade up here somewhere. It was like, I forget where it was. I don't know if it was last week or not. I think it might have been this trade right here, or like Monday or last Friday or something. It would move like 20 cents, or like it would move the littlest bit, and these options just paid and paid and paid and paid. I'm like, shit. I'm gonna tell you right now, this right here, other than the trade I missed on Coinbase, this was a big hitter because it didn't pull back, right? So there's options as it just continues down, and if you're in dailies and it tries to bounce back, it's going to eat a little premium depending on where you are, especially if you're out of the money, and then it sells back off. This thing just gave you that continuation to where I know if I were to have been able to pull up these options, they paid. Right, I could probably pull up next week's, but I'm not going to right now. Just know that this is the type of price action that you benefit from. You know what I mean? You don't want to like pull back and then it reverses like half the move. Or not half, but like the majority of that downside move and then falls again. You're not going to get paid. You're going to have to like scalp. So this was just beautiful, and I'm upset that I missed it. I was watching Tesla. What else do we have? So Alibaba. Let's see here. We put this trade in your lap. But yes, Bank of America came out with the downgrade, and we said it. Live streamed like, yo, Bank of America is like, here you go. Here's your present. Just right at the door. Handing us the money. All right, Baba. So Baba is something I'm going to be watching. All right. And what I want to see out of Alibaba is, if you guys see here, all right, there's two things. It looks like it's rejecting the 50-day, but I don't think that's it. I want to look for the pullback. I want to see where we open Monday. If we can continue to hold this level, because what we've done is we've gapped up above this level. You've rallied off of it. You've pulled back. Now, do we rally again off of 73? So for BA, I would write down 73. Okay, 73. And there is this minor level. This is like a minor level here at 74. But I would write down 76 would be your target. If Boeing does not break 73, right? It's like 72.90 to 73. All right, it's like a 10-cent range. The 20-day moving average, how about that? The 20-day moving average is right where it's sitting at. If we can get this extension higher off of 73 and get through, you got to get through 73.87. You got to get through Friday's open and Thursday's close. All right, and which would also be Tuesday's close. So 73.94, 73.95, 73.90 to 74. It's again another 10-cent area. You bounce off 73. You got to get through that 73.90, 74 area. If you get through that, you can look for the pullback to sustain that level and look for the rally to 76. But I want to try to get long. If 73 doesn't break, I'm going to look to go to 76. Okay, if you guys join us, and I'll tell you guys my thoughts throughout the volume and just like what happens. I don't know if we're going to get news tomorrow over the weekend and so upside target off of 73 is 76. The downside target is going to be 71 to 70. All right, that'll be the gap fills. All right, I'm not sure. It'll all depend. I think that we can hold. I'm just curious if Baba's got to get down to 71. If we get to 71, I will be long. Look at the volume that we've had on Alibaba that's came in there. All right, that's the biggest sign to know that these prior resistance levels are going to become support, is when you break them on an increase in volume. It's important to know that. All right. You got to look for the 100-day. If we're able to get this along, I know we'll be able to get it. I'm sorry for yelling. I'm just, my mouth is dry. I know we'll be able to get this. It's just when, right? It's when and where. Where do the buyers step back in at? So what you're seeing is you're seeing a shift, and I said it last week. You're seeing money get pulled out of some semiconductors because you're getting noticed that these earnings, and I told you guys, I want to know who are the winners, who are the losers this earnings season, and out of each sector, what sectors are winning and losing, and also which companies are winning and losing, like which ones are getting business, which ones are guiding forward, which ones aren't, because you're going to be able to write things down and know the leaders and the laggards, okay? And you'll be able to know, okay, like semis, we got Taiwan Semiconductors, they did great, right? Netflix did great, okay? If we go back to semiconductors, the Texas Instrument didn't do well. Well, Texas Instrument always doesn't do well. Like, that's them. That's what they do. Same for Intel. So it could be, we're going to find out, is this an Intel thing, a Texas Instrument thing, or is this a Taiwan Semi thing that they're able to just separate themselves from the pack? We'll find out when you get AMD, NVIDIA, ARM, and all the other names. So, but again, I want to see if we can start getting this higher. Sorry, there was a reason why I went there, and I don't know why I went there. So I apologize for that. Oh, the shift. You guys are seeing a shift right now. Last week we saw a shift. Not only did you see the Qs lag, you saw the Dow lead. If I pull up the Dow, look at this chart. Look how beautiful this looks. This is probably the best looking hourly chart you've probably ever seen. Let's pull up an hourly chart. All right, and this is DIA, the Dow. Why does it keep doing that? All right, look at that. Look at this. Like, you have a consolidation. You have a break out of the consolidation. You consolidated on top of the consolidation. Now you just broke out of the consolidation on top of the consolidation, and you're consolidating on top of the consolidation. Is this thing going to go higher? IBM murdered earnings. They had a great earnings. At least that's how the market took it. So this here, if the Dow cannot break out of this, then there's an issue, because this is a beautiful long setup. So what this is going to tell me is, look at Dow names. If I want to be long, look at Dow names. If I want to be short, I need to look at the Qs, and we can put these trades on both sides, right? Like let's just say like I'll be long depending on if the sector. You got to understand the sector too, because there's winners and losers of each sector. JP Morgan, how about that? I don't know how much if Jamie Dimon's in the Dow or JP Morgan's in the Dow or not. I'll have to look. But let's just say Home Depot or Costco, right? Home Depot, the Dow starts to break out of this level. Shoot, I'm going to go long the Dow, or not the Dow, but I'm going to go long Home Depot, and then I will buy puts on Intel, and I'll just let them both work for me. I'm not saying that's what I'm going to do, but if I want to put on a trade, and this also means that if the market starts to go higher and you're in a long in the part of the market that's leading, you're going to get that boost. And if you get a pullback, you're able to take profits on the long, and you're already in weakness. And if you get the market behind your back, once it starts to happen, that you'll get that massive, nice extension to the downside because you're already short. You cut the long, you're already in the short because you're in the weak names. Like, this is the setup that is starting to happen. All right, because when tech is weak, guys, tech pulls back, right? So when you want to get short, it wants to be tech. You don't want to be short like, some of these Dow names. The Dow, right? Just the Dow versus the Qs. Like, pull up a daily chart, see how much the Dow moved. It hardly didn't. All right, compared to the Qs, right? Like, it feels like, it just never. It had a decent move down, but look at the rally back higher, and it's just, you know what I mean, like. If you want your big moves, the Qs have already made the big move to the upside. So we want to be short. If we're able to get that pullback, the Qs and the tech names are going to give it to us. All right. That's just the thought, though. That's just the thought. You know, if big tech is leading, stay long Apple. Stay long Apple and get short Intel, right? And let them both work for you. If you start to see the SPY start to sell off and the Qs start to sell off, okay, cut the Apple position. You're already short Intel. And once you get that market behind your back, it should push Intel down to those targets and really give you some downside. So that's how I like to trade the markets, right? At times when it's there, right? When it's there, not all the time. Some I'll just have, if I have over 3 trades going on, I'm like, all right, this is a little bit, because it's just a lot to like, for me to watch and like try to like focus on, outside of just outright shorting and outright buying. Okay, as far as options are concerned. All right, so that was the day. I showed you guys that. So semis are pulling back, right? If we go here, I'll show you guys, like, there were a lot of semis that pulled back. This is a weekly chart, though, just so you guys know that. This is a weekly chart here. It's Intel, ARM, Texas Instruments. Okay, there were a few others. All right. Oracle did really well, right? Because why? The Dow is at highs. So this is that right there is my point. The Dow is at highs, so therefore Oracle is up there. Oracle is a Dow name. Or look at CRM, right? Netflix, right? Green. But you can start to see some of the weakness coming into those smaller semi names. Again, and if you guys don't know, like ARM is more like a contract. They do contracts, right? They design these equipments and they send them off to be made, and they own the rights to like the making of those. So we had Tesla earnings, Netflix earnings. Netflix doubled their guidance for EPS. We went over that Wednesday. I don't know what they know or think, but going from $2 a share to $4 a share, I don't know if this is a first quarter thing or not, but that's pretty crazy to raise your expectations, unless they know that there's a lot of layoffs and people are going to be watching Netflix. I don't know. So I'm still trying to juggle that, because I feel like they know something that I don't. So we already talked about PayPal was down. Energy. All right. So energy is one of the names that I want to talk about. And we know Tesla. We gave you guys some of the targets for there. And you know, if you joined us, Tesla did recall 200,000 cars because of backlight camera glitches. It's not a big deal. It happens to just about every other sedan or car, I should say. Right? The backup camera goes black. It needs to be fixed. Like, it's not a big deal. So that made news for whatever reason. Energy names. All right. So I'm going to read this because I just want you guys to know. Please take note. If you decide to follow us, or when I give you this right now, I show you these charts. If you guys do decide to put risk on or take risk off, like by shorting or going long, buying calls, buying puts, not because of this video, right? Just because you yourself have seen on this video, like, oh, you like this setup or you don't like it. You decided to trade it. Please take note, if you're new and haven't traded some of these names, that you guys are understanding how they work, right? Whether it's from the taxes, okay? Or are these ETFs or ETFs futures, okay? Because you need to know when these future contracts are going to end, because you could your position can just get cut in half or to zero. And you're like, what happened? Well, the futures contract ended and it started a new contract. The stock's up, but I'm down because the futures started a new contract. All right. USO, UNG, all of those get gap ups and gap downs due to new contracts. A lot of people don't know that because they don't understand the underlying asset. And we're going to go into some energy charts, okay? There are a few. And again, like you've seen here, you've seen who was like, there were a lot of winners this week. This was a nice green week, but you had some red. Like, you had some people get hit, right? Tesla, Lockheed Martin, Northrop Grumman. Like, some of these defense names were down on the week, okay? So a lot of your semiconductors, PayPal's was kind of just a PayPal thing. 3M. I don't know what happened to 3M. I thought they did decent on earnings. So, let's see here. Yeah, they bounced back, but I guess they had a bad earnings. Do you guys know? I wish I knew why my charts were doing that. Let me do this. Time axis. Apply. Bang. Okay. Maybe it won't do it now. Earnings, they sold off again. Wow, that's brutal. Okay, here's a beautiful short then. If especially if the Dow, well, I don't. This name's not in the Dow anymore. I don't think so. Never mind. Scratch that. If you see the SPY sell off, see, nah, never mind, because the waiting on that's. If you just want to take a short, okay, this might be a stock you could look at. All right, it's had a nice run. All right, $97. Let's go to the daily chart. Let's go look at the hourly first. So you have the hourly chart. You have a really nice bull flag here. This thing should have room down to $94. You could probably get 3M if you buy contracts like 3 months out. You could probably get this thing down to $90 and have a double, triple digit gain on your belt, depending on how, how quick it gets there and where your entry is and stuff. I can't guarantee you that. I have to see the deltas, but like let's look at like a March 1st, okay, and then we have the 92s. We'll look at like a 92 put, and look at that. Like it's a 27 delta. It doesn't really move. I'd have to see. So that they are pretty spready, like I figured. But you might have to go closer to the money because of you'll have to find out which option prices are liquid. Like you can see here, 85 to 102, 70, 79, and you'll have to see. Well, you know what would also matter too is what date that we go with, which would be liquid or not liquid. So that's just an idea. If you do decide to do that, make sure to try and limit order in those, or you may, regret the position. Which I do a lot. So that's that. Okay, winners and losers is what we were talking about. Then I'm going to go right to a couple things. I talked about GDP and how I was wanting you guys. I'm going to be paying attention to I'm just going to see what comes in this week on Europe, France, Germany, Italy. I want to know where their GDP is. They're expecting negative. So therefore, next quarter, if they're all negative, chances are we're just bound for it. And that could be the reason why Fed starts to cut rates. We have Powell this week. Let's see what he says. I don't think he's going to cut rates just yet. Maybe he does. I don't think Powell's going to cut yet. But if we get GDP numbers come in negative, they will be cutting. Or matter of fact, you know what? We could probably find out right now. Because let's see when those countries start to report. Because when they start to report negative GDP numbers, Powell's going to be able to see that. Is this before Powell or after Powell or during? Well, they'll be able to see it that morning. His meeting isn't until 2 o'clock. Yes. You can see here, France, right? -1. Germany, -4 year over year. Right? Quarter over quarter, flat. Listen, I'm telling you right now, Jay Powell and crew will be watching these. They will be watching this data. They already know. So if these things come in way under, Powell may cut rates to get ahead of this stuff. Possibly. I don't know if Powell can go another, maybe he can, I don't know, another month or so. Because he could always lower it by 0.25, right? He could always, I don't know. He's going to watch these numbers. And if they come in lower, I want to see what Powell does and how he reacts. I want to see how he reacts to if these countries have bad GDP numbers. Because he will know that storm is coming our way. He'll know it. And he'll want to get ahead of that the best that he can. And I feel like that's why you're starting to see him get like this. Is because, one, the bank term lending program, that's over with. You have GDP that expectations are negative. They were just up 2-3%. Go look at Europe, right? Go look at Europe's GDP. Go see what they were last quarter. Let's go look. Look at it. They were positive, right? You're talking last quarter. They were positive. So, and now it's just, whoop, you were doing really well, right? 2023, you're about to get the fourth quarter for GDP. Does it come down at 0.5? I don't know how Europe works. I told you guys I thought we would be about a 3 handle. All right. It's what it came in at. High 2s, low 3s, and it came in low 3s. Italy, same thing. But more so Germany, Europe, France, Australia. Really just Japan. So keep an eye on those because that's what Powell's going to look at. We'll go over, we did have a good sign with the initial jobless claims that came up. And winners, if you guys want to look at these are your winners and losers for the week. Again, this is for the week. All right, they're up a lot. So if you guys have any other charts, that's about all I have. We can run through some charts real quick if you guys want. That's up to y'all. I have a few things that I was wanting to do, but Apple, I want to see if Apple holds this level. Okay, 192 on Apple. Oh, and I'll bring up Save also. All right, I'll bring up Save. Apple 192. All right, just make sure that you know where the 50-day moving average is, which should be right around there. All right, it should move it up. What I think you'll get is, because you have earnings coming up on February 1st, which is when? So do we have a whole nother week before 6, 7, 8? No, so they report. Let's see here. SPY 2500. I wonder, you know what's funny is, Ziggy, I think, and I'm curious if we like just shy get there, right? Because of what I was just saying. Like, I feel like they're going to tease us. I do. And this is my opinion. You know, I would love for the SPY to just go right to 500. I would love that. But I feel like the end of February, the bank term lending program's leaving. We're starting to see profits. Like, look at Apple. Apple's starting to pull back, even though, you know, that's a level of resistance. It's going to pull back anyway. But like, look at the size of the candles, right? And how they are. And I feel like we could get up to like close to 500, and we don't get it. And right, we just fall back from it. And then it's like, I wanted that 500, and we just don't get it. Or just like COVID, when we got to 400. 400 was my cutoff. Like, that was like, I'm done buying. We get to 400, I'm done buying. And what it do, it went from like 398 and gapped up to like 402, 403. And I'm like, you know what I mean? I wanted that psychological 400 level. So it's funny you say that. I'm actually kind of curious with the S&Ps, what happens. I'm really curious. We need tech to stay strong, though. Like, if we can just like pull back and then go higher, I don't think we can do all that by the end of earnings and by the end of March. Because I'm telling you, man, like, once these financial conditions start, luckily though, here's the good thing. You guys ever like been in the markets before COVID, and even during COVID you saw a glimpse of it? You see how boring and non-volatile it gets during the summer? If things can just work themselves out during the time, we may still have a volatile summer, right? A nice tradable. Like, this market has been unbelievable. Just opportunity. Opportunity is everywhere. I can't explain it. I mean, I can, but, you know, so we'll see, man. We'll see, you know. I feel like we might get teased. I feel like we're going to get teased with 500. So Apple is pretty simple. I'm actually still, you know, I was thinking last week if I thought about buying like some calls that weren't too far out of the money to see how the option prices did. But I had so much going on, right? Tesla, Netflix, Boeing, JP Morgan. JP Morgan, if you guys don't know, is another one. We just changed long. Oh, I meant to show you guys USO real quick. Let me go back real quick. Okay, USO. So, for anybody that's new here, like 3 weeks ago or so, I called out Oxy. All right, if you guys trade these, know that know when future contracts end. Just know when they end. You're starting to see a lot of people get bullish. All right, Wednesday I posted a video that I felt like natural gas and like just energy was like, you know, going to. I felt like that's our next move. Like that's the next location, right, to the upside. So when the markets start to pull back, why? You'll start, but it's not why, but you'll notice that in those pullbacks, that energy will start to rise. And why does energy rise? Because if profits are being taken out of tech, it's not that this money is just leaving and going right into a pocket. This money is leaving and going to find a new home. A lot of these names have nice dividends. They won't sell off as much if for some reason we have a terrible Apple, a terrible Microsoft, a terrible Google, Amazon, or even if they're not terrible, that they start to just lower guidance because they're uncertain about the future. So they put it in safe areas, right? Low PEs, high dividends, right? They're on their lows. So it makes sense that you're going to see some profit taking out of like ARM and all these other names. You're seeing the SPY pull back and not like extend and like just like in a bullish sentiment. Like it's sitting up here chopping. It's not even chopping. It's going up, selling off, and you get a pre-market bounce. You get like a gap up. It'll just go up a little bit and then it just sells off. And we noticed that last week. And this is where we're going to find out real quick if money's going to go here. My opinion, like looking at USO, this looks like a huge bear flag that could suck in a lot of longs and sell off. I want to be long. I'm going to let this show me because I can be long and short. I have a huge bear flag here, okay, where it's going to go long, hit the 100-day where it's at right now and sell off. If it does sell off, then I'll look at like tech and some other names for the market to climb higher. If it doesn't sell off and it continues higher, I'm going to look to get long these names. We have been talking about Oxy and all these other names. Like, let's say if we bring up like, come on. Sorry guys, sorry about that. Let's go here to like, not this one, not this one, not this one. Right here. Let me pull up some of these names because you'll see they're still making all-time highs. Some of these names here in like oil and gas and energy. What is this? MPC. What is this? Marathon. So it's MPC. That's one of them, okay? MPC. That's one of them. ConocoPhillips, okay? Look at these. They're making all-time highs. Right? They're making all-time highs. All right. And they got some solid volume here, I think. Kinda. And that's what I'm fighting is the volume. Like, look how low this volume is. If you look here to the left, look how, like, they're all these candles are up here at the top of the chart. You go down here, this is like a low volume bounce. All right. Let's see. If we go to like USO, right? Same thing with like the volume, in my opinion, in the volume. And look, we're oversold a bit. Right, we're starting to get oversold. You guys may not be able to see that, but I'm going to try and put it in an area where you guys can see it so that you guys know what I'm looking for. So there's a lot of people that are going to come out and start. You're going to start seeing if you just turn on anything. I guarantee it. Next week, Kramer, you're going to see YouTube videos, energy, 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 energy. Well, we already brought it up last week on Wednesday. We started to sense this rotation. I'm curious if this actually is a sell point. I feel like this is a fake out long. It grabs people's attention. They try to go long. It hits that 100-day, and because it's a low volume bounce, the RSI is over. It's not overdone, but how much further do you think we can go from here? Even if it's like, I don't know. Yeah, so that's what I'm watching. I'm short, but I'm also not counting out the long. All right, and we're gonna find out soon, because 2 weeks ago. It kind of makes me bullish in a sense. If you've been here with us for a while, you remember me bringing up Oxy, and we brought it up the exact same day that it reversed. If you guys see this right here, we were long and brought it up this day. That day right there brought up a lot of divergence, and I tell you guys a lot about divergence because it's important. All right, so look at this. I'm going to show you guys a lesson, and this is a lesson in trend reversals. Not like as it's pulling back, just like buying the pullback and expecting it to go higher. How can you have a decent, good idea that that thing is going to reverse? All right, so if we see here, I got to bring this down, bring this up. All right, you can see here when Oxy was putting in lows, okay? Oxy's putting in lows here, right? Look, it puts in a low. Come on. It puts in a low, right? It doesn't want to click, right? Puts in a low, gets a bounce, right? And then it puts in a fresh new low right there, okay? 1213. Well, what's the RSI doing? The RSI is putting in a higher low. RSI, that was a trend reversal. Like, so if I bring this up and I pull it back down for you, you're going to notice that as Oxy is coming down, you can see that tail, and that's what starts it. Okay, make sure that you guys can even see it because I know I have my whatchamacallit there. Where's my video at right now with that? Okay, I gotta go over a little bit more. Sorry, I'm trying to line it up because I got a screen over here. I got to go a little bit more maybe. All right. Either way, you'll have to pull up a daily chart for yourself, worst case, and you'll see that the RSI, as the stock's coming down, the RSI is making higher lows. Not just like going higher, but it's like pulling back higher and holding and going higher. So you can see here just this small area here off of this pivot low. It puts in a higher low, and we smelt the divergence. And look, we came in with a huge gap up. So everybody that's in chat, you guys know we called this out. And then I said, I said, guys, guarantee you, you start getting CNBC and you start getting in files that, hey, you start getting in filings that Berkshire has bought more. And what we're doing here, we still want to know what's going on. So this target here takes you to all-time highs. Okay, 105.64. Where's this at? 110. You can see here roughly the same area because we don't know where it's going to be again. Like if you were to get long right there, look at that, it's all-time highs. I wonder if Berkshire is going to continue to eat this up. If energy goes higher, that's going to be a reason to take Oxy higher. 2, we could come out and say that they own over 20%, 30, 40%, like over that mark, and take this private. And if they take it private, what price is it? What is that at? What is it? $90? Like everything about this rally bull flag and a lot of other names are doing the same. Either it's going higher or we have a really good opportunity to get short some of these names. And what do we have coming up next year or at the end of the year? We have an election. So some of these names are probably could either sell off, or you have a case like Oxy where Berkshire ends up taking it private, and the private placement price is like $85, $86, $90, maybe $1, right? So, but that's what I wanted to go over was energy. Joby, why have I heard that? What's the ticker? Do you know the ticker? JOBY, is that the ticker? I think. I still have some stuff I need to do, guys. This is it right here, Joby Aviation. This is a nice. Let's see here. I don't know, man. I'd have to leave it alone, buddy. I'd have to leave it alone unless there's some news here. Unless you have some news to bring this thing back up higher, I would sell it if you're down. You got, it's when you play some of these names. I don't know like the float on this thing. I don't know much about it. But just look at, I mean, it screams penny stock, which I trade, right? When I have to, right? If the market's not doing anything, I look and see what's on the scanners for penny stocks and stuff. Man, if you're in this, I don't know. I mean, it's a low volume pullback. You have that going for you. You have some nice volume down here. You probably get some support down there at $5, $5.10. All right, you can see here the volume, but the volume barely comes in. It feels like the volume comes in after it's been pulled back, and it's just somebody nibbling on it, right, for long term. I don't know anything about it. I wish I could give you more information and thoughts, but I would say if you're in it, I don't even know where you're in it at. Hopefully you don't need the money if you're in it and you're down a lot of money. I'm not saying you are, but if this is truly a name that you do like, I would look at this area. $5, $5 is a solid area, and you'll know quick, right? You have to understand what are you looking to do? Is this a company that you're looking to like own for the next 5 years, 2 years, 10 years? What's the 5-year expectation out of this thing? There's a lot of questions I could ask. The one thing I will say is the market's at all-time highs, other than the IWM really, and this thing's down on lows. So there's a reason why that this thing is still down on lows and not participating with the market. It could be the sector. Or it could just be it's either a penny stock or it's just a company that's like not doing too well. Here's a small business company, GFL. It's a company I like. I don't know, like, as far as, like, outstanding debts and all that stuff. Like, it's not that I like them. I just feel like they're opening up new city. They're big where I'm at. I'm actually, the way that this chart looks is how I kind of feel about him. I was big on this name. Not big on it, but like wanting to get in early, all right, for that, 15, 20 year mark. And I feel like this is a new trash company. They're a trash environmental company. They offer trash services. Like if you go to any shopping center, like the majority of the trash bins at shopping centers are this company. Houses, like they're everywhere. So I'm like, you know what? If they're going to do anything, like let me be a part of it early. I did, and I missed this pullback here. Look at that reverse head and shoulders there too. Look at that. Left shoulder, head, right shoulder, it pulls back and hits it, bang. And that's probably when ensued a rally. Yep, look at that rally. So they said they make flying taxi prototypes. Okay. You got to think, man, like, think about what you just said and how much growth is from that. Like, all depending on what you're looking at. Are you looking for another company to come in to buy them out? You know what I'm saying? If you're not looking for that, like, me personally, I'm focused on names that I feel like have like I'm not opposed to buying those type of names. I will put a little bit of capital, because you could have people, like companies that are very small that do stuff for the government, right? And what happens is they get these contracts for the government and they're small. And what happens is that they grow. And the CEO is not capable, or if he thinks he is, he will run that company to the ground. Because when you take a company to that next step, you got to have a CEO or guidance on how to run that company on the next level. So what you'll usually see is a buyout. And depending on some of these small companies, whether it's for like defensive names, like where they have a lot of contracts through the U.S. or another country, and then you're really in that stock to look for a buyout, so you can have like a proper CEO take that thing to the next level. So that's an important piece there, is knowing who first the CEO is, because if you know who the CEO is, you can always go look at his past history. What are some of the things that he's done? Is he known for, is he a type of person that will just do offerings after offerings after offerings after offerings, and there's nothing but a warehouse with like nothing in it, an empty warehouse, right? And he's just there to just scrape money out the markets, right? To take people's money. What type of person is he? Do you know? I'm going to ask you that. Do you know what type of person he is? Is he? I'm not saying he is. He's probably not. But, what is your goal? Are you looking for them to get bought out later on? And how, if not, how much growth does this sector have? So, because remember, they're there to take our money to put it to work, right? Now, there's different types of topics you could put it to work. You could give me money and I could go open up a bakery. I could go open up a pizza shop and kill it, right? Versus I could say, yo, guys, I want you guys to give me some money so I can, I don't know. Let's say start a trading group, right? What do you think's safer? To open up a pizza shop first, where in an area where there's a lot of people, have good tomato soup, have the great crust, right? Have everything on par, or hope to have a trading group and spend all the money on marketing that we may not get back. We know if we open up a pizza shop, somebody's going to pick up that damn phone and call and spend money with us, right? Even if the food's bad, right? Chances are we're still going to have some money flow, right? Chances are if we go to the trading part, we may have to spend a bunch of money on marketing, and we still may not be able to reach a bunch of people, or we're getting ready to come into layoff season where everybody's laid off, nobody has money to spend and buy. So it's like, what type of, what type of company do you want to give your money to? I ask you that. Because it's important, man. Respect your money. Like, make them, earn your money. Okay? Like, if I'm telling you I'm going to go make flying taxis, like, I'm like, Now, if it was like something else, you know what I mean? So, yeah. Do you know, what did you say, XOM? Yes. I'm going to right now. We'll do that. And I'm gonna wrap this up here in a minute, and we'll be back on tomorrow night. But yes, XOM, it was pulling back, right? Yeah, it broke out of those lows. So this is why I'm bringing it up. And thank you for bringing me back on track, Wiz. I appreciate you, bro. Thank you. I can get lost in the sauce there. Um, this is exactly why I'm curious if we're going to get along. Was because we identified this, and then you had a quick shakeout like you saw on Oxy, and then the quick reversal bounce. Like, was this a big shakeout? And I've said it on stream, and you know, Wiz, if you own any energy names, and if you've been in for a while, which I think you have, do you remember, like, so I bought during COVID. I bought One Oak, Oxy, Diamond, all of them. For the most part, all of them. I pretty much covered the sectors. Bunch of winners. But what happened was is I sat on that money. I was up money, and then it pulled back. And it was like almost a year and a half, going on 2 years, before I even saw it. Like, so every day, think about all the people who were, buying Exxon at the highs and are either down money or like flat. And it's been what? Oh my gosh, I'm sorry. It's been 2 years. So think about that, because psychologically, when this thing runs like it did, that's why you're seeing this sell-off. Because of the time. People are locked in these things. They're either they're waiting to take profit, or they're just like, I'm break even. I actually have profit. I do not want to spend another 2 years sitting on dead money. You're getting a dividend, but you know what I mean? That's not doing nothing for you. You want to see that. Let's all be real here. The majority of people want that dividend and that stock price to go higher. So I'm really curious if this pullback that we just had the last week and a half was a shakeout. It feels like a rally, put in a base, it pulls back, and you got that small little rally, and then it pulls back further to shake out weak hands because they think like, okay, shit, I was just up, I didn't take profit, I've been down money, now I'm going to be even more down, like what, and then it rallies. So this is a prime example of how a bull market works. You rally, you consolidate, it'll go up to that high, and it'll pull back, it'll start like breaking the level, it'll suck people out, and it'll go long. The best example that I can tell you, guys, was Cloudflare, right? I wasn't too confident, like I didn't know much about the company. But when I bought this, I was sitting on money like I was just flat for so long, right? I was flat. And what happens is I bought it around like this $30 level. Hold on, we got to go way back. I bought it at like $30 or so at COVID, all right? And it was in like July. And this is a perfect example of the psychology of owning the name. I bought it here, right? I bought it. Was that like, that's 85? No, I bought it in the 30s. 2020. Net is Cloudflare. I could have swore I bought this thing in the 30s. Yeah, right here. Okay, yes, $30. Yes, $30 was in July. I know I did. Yeah, July, right here, $37. It was like that 30, 35. So this whole month, right? So this whole month, and it was so funny because look at the sell-off, right? So I'm in this name in June, July. I'm at a party, and I'm sitting there buying shares of Net. I'm at a funeral. There was a party afterwards, and I'm buying the dip. Well, at the same time, I'm watching Microsoft. I'm watching Apple. I'm watching Tesla. I'm seeing all these names go, and I'm like, dude, what the fuck am I doing in Net? Like, is this company even anything? It's sitting flat, and it's putting in this head and shoulders, but it's just flat. And really, I'm down money because it's trying to break out, and I'm buying it, hoping that it's going to break out with the rest of the market. And I just gave up on it. And look, when I gave up on it, it was right there on that sell. I'm like, yeah, what am I doing in this no-name name anyway? And then look what happened. Look what the hell I missed. So to me, this is a prime example. This thing selling off, going from 30. This thing went to 200 and some dollars. If I could have just held on for like a little, like another 2 months, it's because I visited the company's website, right? I went to the company's website. I did a little homework, and it just seemed like it didn't seem like a stock that's going to go from 30 to 250 to 200 or even 150. So I know that feeling of being in something, and even over the years of being in something, that was just something that I again, net was just an idea that I remember that I'm like, everything's going to highs, and I'm sitting here like I got a little bit of money in net, a portion of money in net, and it's not going anywhere. And then it starts to sell off, and I'm like, man, this thing. And then what to do? It goes to 280. So do we get that with energy? Do we get that with energy? That's what I'm going to be wondering. Okay, so energy had a nice week. We're going to be looking at it, and I'm going to let it tell me what it wants to do. I'll probably try to take the long. You know, like USO to me has like the biggest bear flag in the world. It's right at the 100-day moving average. It's got some light green candles in it, light buyers, and I feel like maybe people are talking, and it does, you know, we're going to find out. We're going to find out, because if we can take this long, guys, it should give us continuation. It's either, I feel like USO, if it does not reject that 100-day, or if it pulls back and it finds support, I'm going to buy that support. And I'll know quick on USO, for instance, if we're right or we're wrong. I should know quick. Like, this would be an area I would look at to buy. Like, I would give it to, like, really, I'm going to give it right there. Like, it got just above it. If it pulls back, then I'm going to look to buy USO at $71. Maybe the gap fill, okay? Like, I'm not going to touch it if it's here. Look at this green, look at that red candle. If this thing cannot get through the 100-day, you probably just pull back. I want to see that pull back into, like, this area, or even, I mean, this area I think is going to be too far, right? Because then you've retraced over 50% of the move, I would assume. Even from back here, right? There's that. And if you pull back to that level, nah, that's actually 50%. That's not bad. We might actually see that. Let's see this rally. If it pulls back here to 69, that'll be a 50% retracement from the low. And see if it can hold it and stick it. Or stick to 200. The 200's another area. At $70. Sorry for that noise. I don't... So... Qs are sitting on gap support for an attempt for a higher gain. I mean, I'm gonna think that the markets have another little last leg in them. Again, I'm just gonna watch financial conditions. Like right now, see, here's the thing with that too, Ziggy, is we're about to have Apple. Apple reports Wednesday or Tuesday or something like that. I'll have to go through all the earnings and stuff. So you got to remember, we have earnings. And we have been watching the SPY and taking in mind after hours when you're seeing companies report. It didn't save it. That's so weird. My charts are messed up. I had to fix it. Or I thought I fixed it. I don't know what it is. I'll have to go over it and find out. Anyway, we were taking notice after hours when companies were reporting that how the market was reacting, right? Between semiconductors, between Tesla and Netflix. And you can see it here, right? Pulling back. What was that? Tesla's earnings there? It sold off. It sold off bad. So the market's telling you what it's thinking about those. You had a nice little recovery Tuesday. Was it Tuesday or Wednesday with Netflix? Yeah, I think it was Netflix. Like, look at the market. We pulled back for support off of that sell-off. And then Netflix reported and the market loved it. So watch the SPY. Watch the Qs. And watch the Qs when you get like tech names. Like not like mega cap, but like large cap tech. Not your Apple, Microsoft. I mean, obviously, you want to watch the market when Microsoft and Apple and them report. See how the market takes it. Chances are like let's say if Microsoft and Apple were to report the same day. Let's just say Apple does okay and Microsoft does great. Chances are the market will bounce a little bit higher, or have Google and Amazon reported yet? So it'll be like this mix. Now, let's just give an example. If Apple does somewhat okay, or if Apple does bad and Microsoft does like okay, like they just beat, chances are the market's going to pull back off of that. So I'm going to read these real quick. But guys, please again, remember, we're trying to get to 1,000 subscribers. If you could like to subscribe. I brought up the fact that if you guys see videos or ads on my channel, I am not getting paid for that. I do not have AdSense or anything turned on. That is Google doing that. So if you guys could do me a solid and hit subscribe, you know, they do allow us to be able to have this place for free, you know, but they should be able to, provide others with throwing some crumbs, right? So if we can get to 1,000 subscribers, you guys won't hear me say it anymore. Just trying to get to 1,000 subscribers, and it would help some others that would like to learn and be here, that don't have the opportunity to spend thousands of dollars, right? That, and just having a place to go to. So SoFi, let's talk SoFi real quick. Oh, they do report on Sunday. You did buy HPE. I think I owned HPE too. Let me guess. Who is HPE? Helmerich and Payne is HP. Helmerich and Payne. This is another one, guys, for an energy name. HPE is HP, right? Is the computer name? Not Helmerich and Payne, but Hewlett Packard. Yeah, Hewlett Packard. How have they been doing? That's nice. That's a nice pullback. You know what? I don't know where they are on the daily chart, but this level right here at 1560 looks like a nice level to be long if you get that opportunity. It may not give it to you, though. If it can hold 1580, 1579, she might just climb higher. I think she'll give it to you. I feel like looking at this chart right now, I would tell you, just off the cuffs, you guys think, like with technical analysis, this sell-off right here from Friday, and the fact that it did not regain it. Never mind. So yeah, I think you get the pullback. See, I saw this green candle and I thought that it got back up above 1579, 1580, but it didn't. The after hours it bidded below it. So yeah, look for a pullback here, man, and nibble on. It's a solid company, dude. Solid company. But energy, okay, real quick, energy. One of the names, this looks like a bull flag too for some reason, man. Like I don't know what I'm going to do yet with energy. It's in the books though. It's either going to start rallying and rally big, but we have a presidency. Like I could say but like I feel like there's a lot of people that have been in these names for a long time and are ready to take some profit if it gives it to them. So I am just being cautious, and I'm letting you guys know, don't be surprised if I get short energy. You're going to hear a lot of people talking about being long energy, this and that. And there's different sectors too, real quick. There's different sectors. I gave you a sector that's at all-time highs. I gave you, or making new highs. I gave you a sectors like XOM, Oxy. They're kind of just sitting in the middle, waiting to break out, which could be soon. And you have some that are down on the lows like HP. Like this thing is down here at 35. So I just gave you all three. Energy names that are making new highs, names that are in the middle, and names that are at like the lows. So it's important to understand that there's EMPs, like there's oil and drillers, there's the actual manufacturers, there is the actual plant where they take from oil to take it to the preservative. So there's different types of energy names, and we'll find out if we're going to take these longs going in the next week and the week after that. I just wanted to get that across, though. It's just understanding, like, knowing the sectors if you're new. Because we could be on one name, and just because, you're in a name that's energy, that doesn't mean that it's going to go higher with the rest of them. So it's important to know that. And taxes, too. All right, I think it's like a K, I forget what the form is, okay, where you have to, like, it's just, there could be there's tax implications if you buy the stock outright. Now, again, don't quote me. I don't know about the options on them. You have to talk to a tax professional, please. Yeah, I was, and that's what we're just talking about. I'm a little mixed on it. I'm a little mixed on it. You got to think, there's a couple different, so it's like, this is how we come up with ideas, right? What's our bull case and what's our bear case? Well, my bear case would be I got a nice bull flag, right? I have layoffs coming that have just been a wave of layoffs, okay? Financial conditions have eased. That wouldn't be a bear case, but if I have layoffs and I feel like I'm going to have less demand. Now, again, China may get demand because of their February 5th. They're going to start, implementing financial conditions that are going to be easing, and it's going to be like the U.S. is down here going up here, and China's up here going down here. So there's going to be this battle, this mix and match, which could keep energy up, right? So that's my bull case. Which one outweighs the other? All right, I have like just looking at like USO, for instance, right? USO is a solid, got right into that 100-day moving average. We got long Oxy 2 weeks ago, and then it got up and it just had that quick, massive reversal. You saw once you got up there, there's a lot of people that bought that are ready to exit out of this name. You got to remember, there's people that are in those names watching Apple, watching Microsoft, watching Meta, watching Nvidia, watching AMD, watching all these other names that are going to highs, and they're stuck in these names getting their little 6 to 8% dividend. Some people aren't happy with that. They want their dividend and they want that price even if it just can gradually go up. It's been 2.5 to 2 years since they have been sitting there just going sideways. Can we make it? Can we make that run? We'll find out. HPE, Juniper, and we were looking at Juniper a while ago. I'll read you guys what he says real quick, and I'm going to get out of here. HPE buying Juniper, which future earnings will... I cannot read it because I'm clicking this. I got to buy a new mouse. Will be higher, and the reason the dip on HPE was the news. HPE buying the company. About Juniper. I remember that. I got you now. Yes. I remember. What was that, like 2 weeks ago, wasn't it? I remember that, yeah. The chip names have major profit taking. They do. Yes, Mike. And you know what's funny, though, Mike? And I was just talking about this. Was, like, in earnings, right? Take notice to, like, which names are selling off. Because some aren't, right? Taiwan Semiconductors gave everybody a reason not to sell off. This is a weekly chart. Not a chart. But this is a weekly heat map. So when you see this heat map, it's not for the day. Like, this would be your daily, right? That was Friday. So I have up here the week because it's the weekend. You can see that the, like, Texas Instruments, right? Taiwan Semis should be doing really well. Nvidia, AMD is... See, AMD is, like, I feel like we all know or think... We all think AMD is overpriced, and it is right now. But they're releasing large model things that companies are already in on and buying. We'll just have to wait for that story to play out. So I think AMD is expensive. A lot of these names are expensive, like ARM. How many people do you know or actually know when they hear ARM, like, oh, semiconductor? All ARM does is they create the blueprints to create the system, and they own the rights to, like, the type of chip. And they send it out to a company to make it, like Taiwan Semiconductors or whoever, right? So ARM isn't really like they are a semiconductor company, but they're not making semiconductors. They're not making processors. They're not doing anything like that. They're just designing them, and they own the rights to that design. And they sell it to other companies or, I guess lend it out or whatever. And you can see, right, Qualcomm's like half because we're still like not so bearish on Qualcomm because it's still a solid company, but really it's like Intel, Texas Instruments, right? The losers that have always not really been the losers. I'm not saying Intel is a bad processor at all. It's a great processor. It's just as a company, they just can't get there for some reason yet. Look at ASML. That's a semiconductor. Smashing it up 15%. So, and that's what I say, right? When you look at these names, understand what name in the sector is, like, in relation to the sector, what it is. Is it that laggard? Is it that leader? Like, when I say laggard, like, for anybody, because Chris, or I think it's, Mike, like, there may be people watching that they don't know, maybe we say something, they don't know what I mean, leader and laggard and stuff. Like, companies like, not necessarily Intel, but they just had a bad earnings. But companies like Texas Instruments, who we used for so long as kids in school, they have just never, for the past 6 earnings reports, for the past year and a half, just have not been beating, right? They haven't been doing well. So that company doesn't get that much business. Unlike a NVIDIA, an ASML, a Taiwan Semiconductors, which they are backloaded with orders. They have a ton of business. Like, they are, they're a leader in the sector. Versus one that's like, if Taiwan Semiconductor, just an example, it's not that it's true. This probably doesn't happen, but I'm saying it's like, if Taiwan Semiconductors, gets busy, they give Texas Instrument the work. Like, that's the kind of company they are. They take the crumbs and the bread from like the spillover, right? Where everybody else is jam packed, full manufacturing. We just can't get no more. You'll have to go to someone else. You'll have to go to Texas Instruments, you know. So, and then you have names like ASML, a leader in the sector, okay? Nvidia, and a leader in the sector. Guys, I am hungry. I appreciate you guys being here with me. We'll have another one tomorrow night, and we'll do strictly charts. Strictly charts tomorrow night. So if you guys go over all your stuff, I'm going to be going over mine and come up with different ideas, going through the sectors, all that fun stuff. We'll cover the big 5, 7, and we'll go into like, Boeing, which I gave you guys my thoughts on. Is I do want to get down to 190, but what's it going to take? Because I think we get a bounce from here. I would really like another shot at like 210 or that 213. Okay, that 100-day, 200-day moving average. But 209, if it cannot get through 209 and it's just hanging out on a low volume bounce, the thing is like before earnings, the premium on those are going to be expensive, so I probably won't trade it then. I'll probably wait till after earnings, so I may not trade Boeing unless we get another downgrade, okay? Unless we have a reason. All right, like I said, Boeing came out with the gift right at the front door and held us the present. Here's your short for Boeing. So they came out and downgraded Boeing when everybody was talking about Tesla, and we were waiting for it. We saw it. We kept seeing it get up above the 200-day and reject. It get up above 200-day, reject. So I don't know yet. I'm actually figuring that out now. You know what it is actually, Ziggy? I got a ribeye steak from Lone Star last night that I didn't finish. I actually purposefully barely ate it so I could have it today because I had like a ton of asparagus and mashed potatoes. So steak and asparagus, that's what I'm going to have. It's a ribeye steak, bone-in ribeye. It was beautiful. Whoever the cook was did a banging job. Like, it actually put Texas in, like, not that I consider these restaurants because they're like not fast food, they're chain restaurants, but Lone Star just crushes the meats. Or like the steaks at Lone Star crush Texas Roadhouse. Like, crush it. It wasn't fatty at all. I had like 2 little pieces of fat on the side, and the rest was and it was cooked. It was thick. Like, it was just beautiful. It was just a piece of heaven. So I'm gonna go hop on that. Appreciate you guys. And again, the last time, if you guys see ads on my video, I'm not monetized. So if you could hit that subscribe button, it would greatly appreciate it. It would also help others find us. Thank you guys for being here. Tomorrow night, 6 o'clock, 6:30, when futures open, we'll do a live stream. We'll go through a list of charts. If you guys have any companies you guys want to go over, we'll all go over them. And real quick before I leave, JP Morgan. JP Morgan was another one that we were short for like a week and a half, a week going into the earnings here. After earnings, we were short. It was giving us like massive follow through to the short side. It was a great trade, and then we switched long. I think it was like Tuesday or Wednesday. I told you guys that this level that I wasn't sure was a big level at 166, 165, high 166, high 165s. This turned into be a pretty solid level. They're still getting liquidity. You can see here this nice break and test off of 172. We got to look for a long on JP Morgan to go break and get back up to that high of 176. This is a beautiful setup in my opinion. All right, it is still resistance, but the fact that we held that previous pivot high here, look at the daily chart or this 15-minute chart. Look at your RSI, right? So there's room for upside, whether we get the opportunity to just take it to new highs or like the previous highs. We'll see. Let's just hope that the market doesn't take it before us, right? Let's just see pre-market that move isn't already done. Then we'd have to wait for the pullback into 173.25-ish, this line right here, if it breaks out pre-market and gaps up. We'll see. We'll see what happens. It closed red Friday, but we demolished JP Morgan, guys. Demolished it. The amount of follow through, we literally got short right here. Literally right there on that breakdown. We were out of that trade, and we rarely trade during lunch. We do if we're in something, but, you know, it's just we switched from the short to the long. I gave you guys the short again here at 171 or 172. I said, look to get back down to 169. And we get to 169, I am flipping my thesis. Like I'm not short anymore. Just so everybody's clear, I wasn't short anymore when we pulled back, and I said it on the lives over and over that I was going to be switching to the long side. After this 2-day rally there, it showed me that, hey, we pull back to 169, 169 holds, bang, look to go to new highs or prior highs. Finviz, all right, I'll give it to you, buddy. All right, and you can do daily, weekly. You can even type in names, right? Like MPC, it'll take you kind of right to the area if you just type in a ticker. Finviz, all right, Finviz. You can see that, right? Finviz. Finviz. There's a lot, man. There's a lot here. So like you have exchange traded funds. So if you ever like can't think of a ticker or think of whatever it is, like we could also, which I might, like I was saying, I might do the double, triple leveraged ETFs and do a small position long, and maybe if we get to the highs, maybe I put on like a small short. You know, there's different ways to play it, or I short a different sector in general. And I'm only using like a small portion of capital, like a quarter of my position size to make 3 times as much. You have the full world, right? And we always say, like, you'll see the shift, right? From the world to us. Like, if you see like Toyota Motor Companies and all these names start to go red and we're green, you'll see the shift from red to green, and it'll just go right through your screen. And then it'll go back to like even, and then it start to be red, green over here on the right, and then as we're red, you can see like we'll be getting into the red. You'll see the shift left to right if you pay attention enough, right? If you pay attention to it, you should see it. There's a lot though. Like look, you can get bubbles. You can do the bubbles. You can do any sector, anything. Nasdaq 100. You can do like seriously anything and everything. You could have every single company on here too. Or, yeah, right there, right? Right? Anything you want. And it'll show you what's breaking out, what's pulling back. Like, look, PBM. So, there's a lot of cool things. They have news. There's news. You have the home, which is like, this page will give you the indexes. It'll give you, like, your gap ups, gap downs, and stuff like that. Down here, it has wedges. And look, also, Wiz, real quick, if you go to the screener, you can literally do whatever you want to do. You can type in your own description, fundamental, technical, and all the above. All right, so the exchange, you can go to like the Amex, not NASDAQ, right? NYSE, right? Earnings, like there's a lot you can do with this thing. So I would, go through them and see what they have. Like, this is another good one that I use, right, for the week and stuff. The groups. You'll see what, like, 1 day performance, 1 week performance, 1 month, right, 3 month, half a year, year to date performance. So, Finviz is awesome. It really is. It is good, especially if you know how to use it. So, under a ticker you're talking about, anyone? What is that? What stock are you talking about? Look, CGen. That's so funny. CGen's putting an ad here. That's hilarious. Oh, okay. So what were you talking about? Sorry. What's the website name for the heat map? I thought you knew Finviz. I was like, how does he not know Finviz? I'm not sure, man. What was the name I use? Sorry, Wiz. I'm not really... Okay, cool. All right, man. That's it, man. That's all I got, guys. That's all I got, man. You guys have a great night. I appreciate all you guys. For anybody that's watching this after the live, hit the subscribe button. Like this video. Appreciate you guys. You guys have a good night. I'll see you guys tomorrow night. We'll get ready for the week. Go back, see what you did wrong, or focus on something you guys want to fix. And let's see if we can't finish this month strong. First week of the year, green. Second week, I was barely green, consider it break even. Last week, I was green. I got short Tesla Friday. I got right out the gates. I get punched in the face, and I'm like, I don't even sweat it, right? I did not like dwell on it. I took a long on Coinbase. It had an upgrade. The long side or the short was the trade. So I was able to literally get back everything from Tesla plus a little bit more. And I traded the SPY at the afternoon. I scalped that move back up to VWAP. And I can't remember if there may be something I'm missing there. There might have been a trade or two before, like in the middle of there. I can't remember, but that's all I got, man. UMC, yeah. We'll check them out tomorrow, Mike. You guys have a great night. I appreciate all you guys. I'll see you guys tomorrow night. We'll make it 6:30 when futures open up, man. I'll see you guys tomorrow night. Appreciate you guys.